Thanks so much for tuning into Trade Setup. I'm Neeraj Shah, and it's a very news-heavy morning today. A bunch of stocks will react. Let's get straight down to business. First, keep in mind that while Friday wasn't the best of days of trade, if you look at the global markets setup, but as I look at the Dow and the S&P and the Nasdaq futures this morning, they seem to be okay. They don't seem to be too bad. So as you can see, the top three on your screen, there is probably a bit of green out there, and therefore the outcome for today may not be really too terrible. We might start off reasonably okay. But I want to bring a chart to your notice. It's in a Bloomberg story about 15 days back, and I had saved it for the first trading day of August to put it out to you. Now, this is, of course, a global market perspective, but it shows how volatility comes back with a bang for the world at large in the month of August. So if you see this chart carefully, of course, it speaks about how volatility tended to dip in July, with stocks gaining before surging in August. The tall blue bar that you see at the center of the screen, so to say, that's the VIX index 10-year average change. And that shows you how usually, on average, volatility tends to come back with a bang in the month of August. Now, if that is true this time around as well, and sure, there is enough reason to believe, enough ammo for the VIX index to come back, because it's gone down so much that if it comes back with a bang, then you might have some petering out of stocks, if you will. It typically tends to happen. So I'm not predicting one way or the other. I can't do that. I don't think anybody can, but I'm just bringing this to your notice. Anyways, that's the month of August. For today's session, as I said, the Dow futures are doing okay. The world market futures, Nikkei is marginally in the green. The others, mixed bag, ASX in the green. But the SGX Nifty, the last time I saw on the SGXNifty.org website, was pointing towards a start in the green marginally. So therefore, yeah, about 0.5%. I'm sorry, not marginally, 0.5%, and which is not bad. So we'll actually have a fairly decent start to the trading day today. Now let's contextualize it with what happened in Friday's session. The MOV function will come up next. Just to put into perspective the advanced decline as it stood on Friday, what gained, what did not. So 283 advancing to 214 declining in Friday's session. So we had a close which was pretty reasonable at the broader end of the spectrum. And a bunch of, pharma, of course, led the way. Pharma and specialty chemicals led the way, led no doubt by the numbers from Sun Pharma and Deepak Nitrite. So that entire pack did really well. There was strength in stocks in the agrarian space as well, so to say. But individual newsmakers were the order of the day. IIFL Wealth Management, for example, or for that matter, Ashok Leyland, which had a big breakout at 132. And by the way, Ashok Leyland may be in news today, frankly, and I'll tell you why, or might be in the movers today. And the other end of the spectrum, companies which didn't do as well on results or otherwise. Remember Motilal Oswal, we spoke about it, so corrected a bit. There was some weakness in some of the cement names specifically, but all in all, the advanced decline was positive, which is actually a great sign. So therefore, what's the trade setup likely to be like? I would presume that a range-bound trade is a more predictable thing to say, with bottom-up being the best stock picking strategy, to be very honest. Anybody who tells you otherwise, is a sham, because even if you look at the last series, right, we dipped all the way to 5,500 or slightly below 5,600 and back to square one, so to say. So range-bound trade, more predictable. I still believe metals, I still believe sugar, and I still believe QSRs could be the themes to watch. Speaking to a QSR restaurant chain owner, I can't get into the names for confidentiality reasons, but they were saying that they had a fabulous month of July. And if it's true for one, it could be well true for the others as well. So you have to do your checks. But yeah, definitely do your checks, because QSRs might just have a fabulous, if they've had a great July, and if August and September are good, then it could be pretty interesting for the Burger Kings, the McDonald's, and the Best Lives, etc., and maybe the Domino's. So keep that in mind. And CV companies will be in focus because of the expected month-on-month uptick in sales. Now, keep in mind, viewers, Volvo Eicher, has actually had turned out a really good performance just on the numbers reported. And therefore, you never know, Ashok Leyland might be in focus today as well for that reason. Remember, like I said, it's already given a breakout, and maybe there could be more in store. Lastly, just keep this chart in mind. Again, from the CK Narayan story that he publishes on the weekend on BloombergQuint, the mid-cap chart is pretty interesting, wherein it is showing how the mid-caps are not really playing the range-bound trade or oscillating between ups and downs. This is the Nifty mid-small cap 400 index. And what CK is trying to do via this story and tell via this story is that it's not quite holding on to necessarily a trend line. It's actually deviating from there and charting its own course and doing rather well for itself. So maybe the activity continues to stay in the broader markets. You don't need anybody to tell this to you. Or what this chart does is tell you that that trend is very much looking like it is intact, and which is great. Now, companies to focus on, so for example, Maruti, Ashok Leyland, or a Concor, I'm not getting into those. They are great and there are obvious reasons. So keep in mind, a Maruti might react, and Ashok Leyland might react. A Concor might react to the land license fees. Maruti for the slightly better than expected auto sales numbers, or because of VECV numbers, Ashok Leyland could do well. So keep those stocks at the back of your mind. Yeah. Then let's get into one more sector, which actually I think could well be continue to remain in focus. I was talking about metals, sugar, and QSR. Now, metals in focus because of multiple reasons. There are multiple news outlets over the last 3 days that have spoken about the possibilities of price hikes from NMDC, from SAIL, from NALCO, and all of those. Some of those could get announced. Some of those might have already been announced. But keep in mind, if NMDC, for example, is raising prices despite arguably weak steel output, it shows firmer demand trends. Similarly, SAIL, if it's taking a step to do this, then they obviously expect firm construction demand, arguably, right? Or NALCO for that matter. If they're doing this, the demand supply situations could be tight in aluminum, and that could augur very well for both NALCO and Hindalco, which I presume are coming out with numbers this week. So very important stocks to monitor. Do watch out for these. Keep in mind, yesterday's development that the top copper mine, I think BHP, the top copper mine has been brought closer to a strike as workers have snubbed the offer. The story is there on BloombergQuint.com. It's a Bloomberg story, but there might be there across as well. You might want to read this because this is big. The workers have voted to strike, and this is really, really very big. I don't know if the things changed in the last 5-6 hours, but until last night, this was what was the deal as it goes. And the other big thing that has happened apparently is that China, not apparently, really, there's a story out there that China's top steel body is expecting wider output cuts as demand slows. Now, internal demand slowing, so China's top steel body believes that there will be wider output cuts. There are two ways to read this. If demand is slowing, would Chinese resort to output cuts, and therefore the world output doesn't get changed too much, and therefore is that a positive? I would argue that it is. What if China decides, okay, no, we've reached a point of optimum utilization, and now we don't need to tell the firms to cut output. So therefore, if it's not getting absorbed here, let's export. I think the latter is difficult because China, it's embarked on a thing wherein they are not wanting higher pollution, higher exports necessarily of these things, at least as per the last readings. So, but this might actually be construed as positive news. Let's wait and watch if the metal stocks continue to do positively. Then some results. Britannia, I obviously can't cover everything, but I'm covering whatever little I thought was very, very important, right? So Britannia, numbers, 3,403 crores, estimates were 3,171 crores. So revenues ahead of estimates. They actually did domestic volume growth of 1% versus estimates of a decline. So that's great. Margins came off a bit, profit came off a bit. So compared to estimates, revenues and volume growth better, margins and profits not so. Citi's note on Britannia, they maintain a buy with a target price of 3,975. So that kind of enumerates what the street largely wants to say. They're saying that it's a good operational beat on very low expectations. So it's a beat as per their estimates, not as per consensus Bloomberg estimates. Keep that in mind. And what they're saying is it's the worst performing consumer stock YTD in their coverage universe, and therefore there is room for the relative valuation gap to be bridged, according to Citi. And the key risk is the promoter group issues. But they maintain a buy rating with a target price of 3,975. Interesting whether the volume growth beat does see a thumbs up from the market or no. Good. Let's wait and watch. Shriram Transport Finance was the other one. I thought the Motilal Oswal note summed it up well. They are saying that looking at the disbursement and the collections trajectory, they estimate a strong FY22, 10% AUM growth and an ROA ROE of 1.8 and 11%. They're saying the management on the call mentioned that it has restarted evaluating the merger process within the group companies, which may be a near-term overhang till the final decision scheme is announced. So there could be a near-term overhang. By the way, they maintained a buy rating with a target price of 1,600 per share. So all of that is great. But the key to note, viewers, and this is why I brought it to you, that if the management saying that they've restarted evaluating the merger process within the group companies, could it be a near-term overhang on STFC, and therefore could a long call get disrupted today? That's what you got to ask yourself. So keep this at the back of your mind. Results impact likely to be seen on some other stocks. Nureka, superb performance, PAT up 4 times YOY, 9 times QOQ. The stock was locked on an upper circuit in Friday, but I would reckon could do well today. Gujarat Ambuja Export, amongst other things, I thought the EBITDA margin performance was pretty strong. EBITDA margins at 16.4% versus 11.3% and versus 9.2% YOY. So this was the standout feature in GAIL, and which is why I'm bringing it to you. The stock might have a positive reaction. If it does, then you know why. Keep in mind, it's rallied a little bit already, about 4-5%. So keep that at the back of your mind. But could have a positive reaction. IDFC First Bank could have a negative reaction. Gross NPA has risen to 4.61% versus 4.15% quarter on quarter. The net loss of 630 crores. It wasn't the most impressive quarter. Keep in mind, IDFC could react as well as a result of this. So these are two that you got to keep in mind. And KEI, I thought the results beat estimates led by growth in the cable segment. So this one could be a reaction. I'm not talking about PI Industries because I'm a bit confused there between the numbers and the acquisition that has been announced. So InSwift Labs, API business, actually InSwift Labs could gain as well. So PI and InSwift are the other two that you got to keep in mind. Other stocks in focus. I've included 2 result names out here because I was not completely clear about what happens there. But the 3 names that I want to focus on: NCL Industries, the consortium backed an order of 1,800 crores. So this one could have a positive reaction. Bandhan Bank, the brokerage verdict is mixed after what was arguably a weak quarter. So keep in mind. Now, BHEL, the numbers were abysmal. But if you look at it on a quarter-on-quarter basis, I think there was some reduction, if I'm not wrong, in the net losses. At least our numbers say so. But the Goldman Sachs target is 23 rupees. Nomura's verdict is that you got to reduce BHEL. So brokerages, by and large, are very negative on what BHEL has done. So it might well have a negative reaction today. So keep that in mind. I thought it was important to highlight what brokerages have said on Sun Pharma after a very strong quarterly performance. So CLSA, they're saying that the specialty ramp up is on track. PE rating will follow. Buy rating, target price of 960. JP Morgan again, that more than just an India-driven beat, specialty momentum better than expected. Again, focus on specialty. Their rating is overweighted at the target price of 850. Bernstein, they're saying that the management commentary indicated good growth in certain segments, outperformed, target price raised to 817 from 780. So that's the other thing. So watch out for Sun Pharma and Sun Pharma Advanced Research. Could the momentum follow? My guess is yes. Like I said, I haven't highlighted a Maruti and a Ashok Leyland. I didn't highlight a Concor in the graphics, but those are stocks that you got to keep in mind could well turn out to be very promising names. So those are the others. And I might have missed some, viewers, but I really can't do all. Last but not the least, before I wrap up, it's 14 minutes already. What stood out for us? The Indian traders, for the first time, have signed sugar export contracts 5 months ahead of shipments. Now, keep in mind, the reason I bring this, because for now, the sugar companies have been spoken about as ethanol stories. What is now fast turning out is that the sugar segment also may do well. And that is, as the term goes, Sone pe suhaga maybe. Let's wait and watch. Thanks so much for tuning in today. Have a safe day ahead. If you're stepping out, please stay masked up.